Welcome. I am the FX Savant. And in today's video, what I'll be showing you is how to properly compound your positions to maximize your profits in the market safely. And for my example today, I have a Euro CHF trade with an original position for a 3R risk to reward ratio. And I was able to compound that and add 2 more positions to overall net this one trade a 13 plus R. If that interests you, do me a favor before we get started. Go down, hit that like button. It's highly appreciated. And as well, click that subscribe button. Make sure the post notifications are turned on. Do me one more favor. Go down in the description. I'm extremely excited about it. I have a website. Just click the website and check it out. You don't have to do anything. I don't want you to join anything. Just do me a favor. Check out my website. I'm just really proud of it. But yeah, let's get into the video. So let's get into it. Let's go over how we were able to actually find this one 3R position and compound it to add a 5R position and potentially another 5R position to overall net a 13 plus R trade. So let's replay. And what do? Our multi-time frame analysis tells us we start on the monthly. On the monthly, what do we have? We had the market that was creating higher highs and higher lows. So we were breaking structure to the upside, creating higher highs and higher lows. On the monthly, that's what we have on the monthly. On the weekly, we had this candle here. This candle, what is it? You've heard me talk about it before. It's the one where you want to see the next one fill in the wick. Why do we want to see the next one fill in the wick? Because the market pushed up and pushed down on lower time frames, and that is just nothing but an impulse and a correction. And after an impulse and a correction, what do you expect? Another impulse. So this wick is the retracement on lower time frames. And so what do we expect? We expect the next candles fill in the wick, which is at least to come retest the highs. With that being said, what do we have on the daily? On the daily, we had a market that just created this impulse to the upside, breaking all this structure through in here. So what do you want to see after an impulse? You want to see the retracement. After an impulse, take our Fibonacci from the low to the high, and you want to see a retracement to where? At least to the 382. Why the 382? Because the 382 is the first level of support. In this case, it's an impulse to the upside, a bullish impulse. The 382 is the first level of support that you would want to see the market come and retest before continuing to the upside. Before we continue our impulse to the upside, we want to at least see the market come down and retest the 382. Did we get that? Yes, we had the market come down to at least the 382. Okay, on the daily time frame. Now we're on the daily time frame with an impulse to the upside, a correction with smaller candles to the downside, showing our impulse and correction, with weak retracement candles coming back down. Now that we have that, this is our retracement. So for future reference, here's our impulse on higher time frames, and here's our retracement. This is the wick. This area is the wick. This is our impulse. This is the body. The body stops here. The wick is there. The impulse and retracement on lower time frames that we saw on the weekly. 4 hour, what do we see here? Well, on the 4 hour, we see that price has just started to break structure to the downside. So we have an overall bias of a monthly creating higher highs and higher lows. On the weekly, we had the candle that the next one is supposed to fill in the wick. On the daily, what do we have? We have an impulse to the upside, weak correction candles attached to at least the 382 support level of the overall Fibonacci ratio of the impulse. So our bias is to the upside. Our monthly, weekly, and daily time frames are for direction. That is giving us a bullish bias. So we want to see market moving to the upside. So now when we drop down to our 4 hour time frame, our 1 hour time frame, our 15-minute time frame, the lower time frames underneath the daily time frame, you are now entering into your entry time frames, your smaller time frames. On here, this is where you want to see structure confirm your bias. You don't want to enter into a bullish market on lower time frames and what you think is a bullish market on lower time frames while the structure is creating lower lows and lower highs in a bearish formation. That's not ideal. What you want to do is wait for the market to create what you want to see. If you want to see the market moving up, you want to wait for the market to start moving up before you get in on your lower time frames. So on the 4 hour, what did we have? We had market that had just created this big move to the upside, creating a higher high and a higher low. Here's our higher high. Here's our higher low. Here's our most recent high that we just broke above. Here's the low. So we're creating higher highs and higher lows on this way up. And recently, what did we do? We started to break this structure to the downside. So we broke this low and came back, retraced, and we did not come back to this high. So after we broke below this low, after we broke below structure, we failed to create higher highs. So we created this high, which is a lower high because this high is lower than this high. So we're creating lower highs and lower lows on the 4-hour time frame on what we want is our entry time frame. So what do? We don't enter. We wait. We identify the structure that we'd like to see market break above, because then we would now be creating higher highs and higher lows. That's exactly what happened. If we play it forward, we can see, okay, price came down. And what did I do? I was on the 1-hour time frame because I happened to be identifying the market at this time. Actually, I can play it forward one more candle. So play it forward. What do we have happen? On the 4-hour, what are we waiting on? We're waiting on market to break structure to the upside so we can start to create higher highs and higher lows. I happen to be awake monitoring the market at this time. So on the 1-hour is the time frame I was monitoring price on. If we play it forward, we can see that there was no entry or no even thought of entry until this structure was broken, until this high was broken, and we started to create higher highs and higher lows. So if we do look, we can see that down here, we failed to create lower lows. So there's our first sign, our first indication that price wants to come in our favor, wants to do what we want it to do. We're still waiting. You get paid to wait. Then boom, 5 o'clock, price breaks and closes above structure. It has broken and closed above all the resistance area. So what did I do? I placed my order at recent resistance, now turn support, and was triggered in on this market. Move back out to the hour. And we were triggered in on this market. I was triggered in on this market. So now, as you can see, I entered on structure. My stops on my entry time frame was placed below the low of my entry time frame. And my target, let's identify the target. What do? Well, we want information on the impulse. If we want information on the impulse, we need to take Fibonacci on the retracement to identify where the next impulse wants to go. It likes to attract, price likes to attract to the minus 27 often. So where is my target going? On a higher time frame, bias. So we had the impulse and the retracement. I took my Fibonacci from the retracement and I found my target. Drop down to the hour. You can see drop down to the hour. You can see, keeping the charts clean, that we put our stops below the low of our entry time frame, and it gave us a favorable risk to reward. Okay, so we found this trade idea, this position for a 3R risk to reward. And if we play it forward, let's move out to the 4-hour. And okay, if we play it forward, let's go back. On the 15-minute time frame, we placed our entry at recent resistance, now turn support. We then put our stops below the low, our targets. Use one of the other things that I used before. I don't want to have to go through that again. But we found our targets on higher time frames. We found our stops on our entry time frame right below the low, because if price breaks below the low and hits our stop loss, I don't want to be in this market because price is not confirming my bias to the upside. The market needs to create higher highs and higher lows in order to confirm my bias. If it doesn't do that and creates lower lows and lower highs, I don't want to be in this market because it's not what I identify. It's not how I trade. It's not what I've seen that I have an edge in the market. So you wait for that. And if we play it forward, we were then triggered into the trade, and here, risk-free on the trade. So not too long after, risk-free on the trade, whatever happens, happen. Let's zoom out to the 4-hour and we can show you how I found the next position. You're gonna love it. So price almost came back and stopped me out, but it doesn't matter. Oh well, if it did, then it wouldn't be confirming my bias. So I'm okay, risk-free. Price is now breaking structure to the upside. We are creating higher highs and higher lows. So we are breaking structure to the upside, creating higher highs and higher lows once again. What do? And here's where we get into compounding, how to compound the correct way. The first position, this 3R position down here, is now risk-free. So there is no risk in the market for me. What you don't want to do is compound positions while you have risks open, or while you have potential of loss open. While you have any risk in the market, you don't want to be opening multiple trades on one pair, stacking, while you have open positions that aren't risk-free, while you have open positions that aren't risk-free, while you still have open risk. You aren't supposed to be adding positions while you still have open risk. So with that said, we are risk-free on the first position. That is the first step to compounding your position. You don't need to be adding extra risk, because if I wasn't risk-free on this first position and I added another position, if they both become losers, now I've lost twice with one trade idea. I've only taken 2 positions on one trade idea and I lost it, which is double the effect. You want to be risk-free so that if this trade loses, your overall trade idea is still only losing you 1R, whatever you risk. It's still, you're only losing one. Even though you may have had multiple positions, you're only going to risk and have one open that you can potentially lose. That is so important. So risk-free, what can you see? Price is creating higher highs and higher lows on this market. So what do? I identify a level that I would like to see the market break above before I enter. Now that we've gotten the break above and close above the area, came back, retested. Now we gotten the break above, close above, came back, retest, triggered me in on this candle, and now we're riding. And it's not until this point that I'm risk-free. So risk-free on this position as well. Entered on the market on, so if we look at it on a higher time frame, price broke above structure, came back, retested, and is now creating higher highs. Exactly what we want to see in this market. Oh man, I keep doing the same thing. Exactly what we want to see in this market. We go back, you can see, where's the stops? Stops are below the low. Now, where did I find my target? Identified my target from a higher time frame, which is up here. Same area, same as the first position. Why not get in this day trade? Or why not get into this trade, the second position, at a position with the same target as my overall bias? I can add in positions on its way up to the overall target. So I put my stop below the low and target the highs. Gave me a favorable risk to reward. Now this was a 5R risk to reward, which is great. That's crazy. On top of the 3R we already have running. So now we have 8R potential in the market. Let's go on to the next one. Now that we're breaking structure to the upside, the bullish bias should be confirmed. And it's at this point that we're risk-free on the second position. The second position is risk-free. So what do? Now I identify another opportunity. Okay, I'm risk-free on two positions. Now if the market comes back and hits the stop loss at break even on these positions, you already know. Doesn't matter. I don't lose anything. So I still have a ways to go before my target is reached. I said, hey, let's see if we can find another position. Price is breaking structure to the upside. So we are breaking structure to the upside. So what did I do? And I'm really kind of mad about this because I just missed this third position. Where in the heck is my mouse? I'm really kind of frustrated about this third position because if we drop down on a 15-minute time frame, what can we see? Let's keep the charts clean. What can we see? We're risk-free on both these positions. Price is coming up. Now I've identified a level in the market that I would like to see price break above before I get in on this market. And price, until then, find a little resistance here, come back. We broke and closed above both of these levels of structure of resistance, but this is the main one. Now that price has broken and closed above this level of resistance, I would like to see the market come back, retest recent resistance, now turn support for me to get long in this market and overall ride it to the upside. But what happened? Literally, as you can see, that candle did just exactly that. I had my limit, my order here because I wanted to come see this most recent resistance now turn support, but it stopped. This one stopped the market. So I literally missed by 2 pips this third position that would have netted another 5.3R. But the concept still stays the same. Waiting for structure to actually create higher highs and higher lows before I get into a buy position on this market. Then what did I do? Entry time frame, we put our stops below the low. Our target was found on higher time frames. It gave me a favorable risk to reward, 5R, which is pretty crazy. Missed by 2 pips with another 5R, which is kind of crazy. A 3R, which is pretty good in itself in just one trade. But if we play it forward, what happened? Price shot up. Would have been risk-free. As you can see, TP was hit. So overall, one trade idea, getting long on this and having a target up here, stops below here, entry here. And with that one trade idea, being able to compound this position to find 2 more positions that could have overall netted 13 and over 13R trade. But I was able to get 2. I will, of course, put the trade on screen. Could have possibly had a over 13R trade, but I was able to secure 2 positions, a 3R and a 5R position, missing the last 5R position. So I netted overall about 8R in this one trade idea. I do have the best editor in the game. Trying to tell you he's nice. I will have the trades on screen. You know, I got to come with the facts, let you know that, hey, I called this out. But yeah, that's it. That's how you compound a position, a trade idea safely. You want to do it with your stops at break even. You want to do it in the favorable market conditions, market structure. So if you're looking for a buy, you don't want to compound your position while the market is making lower lows and lower highs. Sounds simple, but you'd be surprised on what happens and what kind of stories I hear. But yeah, other than that, if you enjoyed it, please do me a favor, drop a like. It's always appreciated. My editor works hard. Show him some love. He does nice on the edits. Show him some love. I work hard on these videos. Show me some love. So drop your boy a like, subscribe. Let's grow this community. Let's grow this channel. Please and thank you. thank you and do me one more favor. Go down to the description, check out my website. And you know what? After you check out the website, drop a comment and tell me what you think about the website. So that's it. Hope you all are having a nice trading week. Hope you're having an overall green day. And until the next time, I'll holla at y'all.